Thank you, Mr. Arun, Mr. Rajgopalan, delegates, and of course, I have a lot of friends here whom I have interacted with when I was there as a Bank of India. At the outset, thanks for having me here. It's a great honor to be speaking to this audience. And while I've been asked to speak on deficit financial inclusion, because the delegate also include people from central banks, I'll add a financial stability dimension to this. That's what I thought I will do when I speak on this subject. So I thought the way to present this would be to look at what are the enablers of financial inclusion, and more from a country like India and maybe some of the countries here, which have a huge land area. India is a very large country, large land area, places where it's very difficult to access services, reach financial services, and therefore, and sometimes it's also equally difficult to provide services in an economic and profitable manner. So in such a situation, what are the things that are required to enable financial inclusion is what I thought we'll begin with, and then look at how the DPI has helped us achieve some of these objectives. The first one I thought is from the point of view of public, from the customer's point of view, what are the things that financial inclusion require? One, you would need available banking service within reasonable distance. In fact, we found that when we did some of the surveys, many people said we are not able to go to a bank because I'll need to spend the whole day to go there, get a transaction done, and that's my full day's wage. I have to waste the whole day's wage of 500 rupees in Indian context to go into a banking service. So then availability of banking service nearby becomes extremely important. The second is ease of opening bank accounts. So if opening a bank account is going to be difficult, that's going to put away people. A lot of people become diffident to open bank accounts. If there's a whole lot of forms to be filled, a lot of questions are being asked by the bankers, and that puts them away. So it's important to make it easy for them to open bank accounts. Third, of course, is ease of access to bank credit for new to bank customers. Because many times, because banks are generally dealing with what is called as public deposits, there's a general refrain that they would want to deal with bank customers who have already some credit history. So how do you bring a bank to lend to someone who is new to banks, who doesn't have an official credit history to come up with? Then obviously, it's very important that when you do all this, if you have to reach banking services, nook and cranny, where possibly the business availability options are very limited, it could end up that you have high cost of transactions. Then, therefore, it's not only that these are available at a reasonable cost for the customer. From the point of view of the customer, these I thought are important. Now, what will make banks pursue financial inclusion as a business objective? Because let's be very clear, India has even experienced, because India's banking system until recently was dominated by the public sector banks. The nationalization of banks was done with the sole intention of reaching banking services to rural segments. But because they also have a commercial objective, they were not very easy to do that. And therefore, we found that it's very important that if you want to do financial inclusion, you must dovetail that into the larger business objective of the banks, so that it makes that much easier. And therefore, for them, it's very important that when they do all this, on the one hand, the customers require services at low cost, and it is also important, therefore, for the banks to be able to do that in a cost-effective manner. Because if you have to go and open a branch in a place which has 500 people, you need to have a brick and mortar branch, and you need to have a manager and a couple of people. It costs a lot vis-a-vis the quantum of business that one gets. So how do you enable a bank to work there in a financially sustainable manner? It's very important, otherwise people won't go there. And for that, one of the things that they need is reliable and, I said, efficient. What do you mean efficient? It comes to the whole issue of cost effectiveness as well. If a process of customer identification is going to be very costly, the transaction costs become higher, that will inhibit banks from getting into financial inclusion. And obviously, they would want, as I said, if they have to lend to new to bank customers, they must have reliable data to assess creditworthiness of those partners. This lot of theory on financial inclusion and financial stability, whether financial inclusion promotes financial stability or otherwise, the jury is still out on that. But there are a few things which do point to financial inclusion being positively correlated to financial stability being positively correlated to financial inclusion, and from some of these aspects. One, that financial inclusion results in a larger customer base, a wider set of people who have different demographics, different backgrounds, and therefore that provides provision for both diversification of assets and diversification of sources of liabilities or deposits, which become that much more stable. And most importantly, when if the financial system or a major part of the people who are doing financial activities or who need financial services are outside the banking system, then monetary policy becomes ineffective. If you want the monetary policy transmissions to be effective, you want most of the borrowers, most of the people who are doing business in the financial system are part of the formal economy. And therefore, ability to transmit monetary policy is much greater if you have a much more financialization of the economy, or more people are part of the formal financial system. It's been very clearly proved, as I said, there are multiple theories on whether financial inclusion results in financial stability, but it's been very clear, they established that access to bank credit to SMEs, in particular, has had a positive correlation for financial stability. And even those where there were doubts about whether financial inclusion can be anti-financial stability, one of the reasons found is that if you are pursuing financial inclusion without two other things which are complementary, one, financial literacy, number one, and number two, strong credit information. If you don't have these two, financial inclusion can be anti-financial stability, is one of the theories that we found. And I must tell you this, that India has a very, very strong credit information bureau ecosystem. And I know it's discredited now. These are doing business. India had one of the highest marks in credit information quality, because I think the nature of information that the credit information bureaus in India had is tremendous. So, in this background, I just want to, this is the background I want to put in place to say, how did Reserve Bank of India use the digital public infrastructure to push financial inclusion? And I think it's been talked about, will continue to be talked about through the entire workshop, what India could achieve with the unique identity system that we have called as Aadhaar. And Aadhaar, of course, as you know, provides an unique identity. So, just as a matter of somebody deliberately gave his name as some other name, a very funny name, and he said, I could get an Aadhaar card with this name. But the counter to that is, now for lifelong, you will be only known by that name. Because with that biometrics, you cannot have another card with another name. So it's linked to biometrics, and therefore it becomes so unique to the person because of the biometrics. And it is digitally stored and verifiable. I think the point which was made here, that if you cannot do a eKYC, it just becomes a card. So it's the ability of this verification, digital verification, electronic verification, and authentication, which makes Aadhaar that much more versatile. It's secure. A lot of talks about there are issues about, at least there are actually articles coming about how secure Aadhaar is, and I must say that with fair amount of certainty, that is pretty secure. And one of the things that India did as an expense, I don't know what is the process that you have in India, in your countries, but India has provided a legal basis for Aadhaar. So it's created an authority which manages, administers, and runs this. There's a legal basis on which Aadhaar has been embedded as the identity database for India. And this has been enabled to be used for various purposes. Just before I get to the next slide, I want to elaborate a bit on this uniqueness because that was very important for financial inclusion. India and many countries, all of us have we can be known by our first names, we can be known by our last names, we can be known by the combination of first and last names. And people could use multiple identity cards and therefore have multiple accounts which cannot be traced to a single person. Okay, the uniqueness of Aadhaar provides that if there is a person who has an Aadhaar with X name, any person with that biometrics will only be linked to that X name. And therefore, I cannot have multiple Aadhaars in the market. There are stories about duplicate Aadhaars being there, but I think they are not the authentic ones. So if you actually go and verify in the Aadhaar database, they shouldn't be there now, of course. So what India we began with was to tell banks that you can only use Aadhaar for opening bank accounts. That's how we began. There was some, however, there were issues with regard to data privacy, and therefore that was struck down as a mandated requirement. So we had to make Aadhaar as one of the possible, personal identity source. However, by then, a lot of accounts, bank accounts had been used using Aadhaar, number one. Number two, one of the major sources of credit to the lower economic strata people in India was the microfinance institutions, MFIs. And for them, very important to have credit information component. And if people are borrowing in multiple names, then the over indebtedness will not be shown through the credit information bureau because it will be different names. So we had, in fact, RBI had asked banks and NBFCs and also the credit information companies to what we call as do a deduplication exercise, so that people who have multiple names, but you can identify them to be the same person, they have to actually close into a single case. But when it was Aadhaar, it provided a single unique name, and therefore a lot of multiple borrowings became less possible. And the MFIs were actually a lot more comfortable lending to people when Aadhaar was the sole basis on which credit information was being built. Yeah.
The opening of a bank account with Aadhaar, was it in person or online?
So just to, these numbers would have been read out to you, but I thought I'll just need to give continuity and perspective. So today we are looking at something like in July 23, this is VDI database. It has close to 1.4 billion, 1.369 billion of other users numbers. And there's a process of updating of that because some information would have been given which has changed over a period of time. So they have provided a process of updating the information in Aadhaar card, and that's being done. It's like the numbers are like almost a billion. And similarly, authentication for various activities, as you said, DKYC, etc. That's like 102 billion transactions are taking place since Aadhaar is in place. So we have, how is Aadhaar getting used by various people? I told you that the Supreme Court of India struck down use of Aadhaar as the sole identity, what do you call it, database, okay? And therefore, the RBI had to allow other identity cards as well as the for the purpose of opening bank accounts. But one thing the government said is that if you are using a bank account through which you are availing facilities provided by the government, then those accounts have to be necessarily opened using Aadhaar. So, for example, the government provides subsidized LPG connections. Okay, and the subsidies actually got credited to the account of the customer based on their income. And such accounts have to necessarily be linked to Aadhaar. And similarly, you have, for example, if you have availed subsidized ration from civil supplies. You have to be just linked. So close to 765 people have linked. And during the COVID, India did two things. One, it gave direct cash benefit transfers. It also provided support in kind, the form of actual provision of rice and wheat. And these were all to people who had the Aadhaars linked to a bank. And that is one of the things that government was able to do, prevent leakages, and at the same time ensure that the facilities or benefits go to the customer. So we have what is called as a scheme for providing credit to the Kisans, the farmers. All 100% of the beneficiaries have linked their accounts to this, and similarly, 788 million Aadhaar cards have been linked to bank accounts. This was the last one is what is called as Aadhaar enabled payment system. I'll come to that as a document payment system. The number says about 17 billion transactions have taken place. And the government has, one of the things that the government found is that by targeting it to the right people and ensuring that it doesn't go to people who do not deserve it, that there were a lot of transfers going to people who are not even alive. Monies were going to people who were not there because there wasn't a unique identity based on which the accounts were opened. So the government has found that just through 4 schemes in which Aadhaar is being used as the basis for transferring funds, identifying, they have saved close to $33 billion through the Aadhaar system. That's a huge fiscal benefit that the government has given. Here I'm coming to the question that you asked. So I said that one of the important elements of financial inclusion is a simplified account opening process. Okay, and what does this do? RBI has allowed opening of accounts through in person or without being in person. But there are 2 types of accounts. By an account has to be full KYC. The full KYC account is where it has been done in person. But the in person can today be done through video. India is one of those rare countries, large countries, which has allowed video KYC. So that is seen as a person being equivalent to coming to a bank in person. Only thing is they use their agents who will actually hold the program, and the RBI actually, with all humility, it was issued when I was still in this Bank of India. We put a detailed set of guidelines to prevent it getting misused. So the video should capture that the guy is actually there, batting his eyelid for a minute, and those kind of things to ensure that it's not mocked. So detailed process place, and that is treated as full KYC, and an account that is opened by a person coming in person or through video KYC is treated as full KYC, and he can operate the account like anybody else. Okay, number 1. You have also an offline or an online eKYC, which is where you provide an Aadhaar number and you can do a biometrics, which will get validated online from eKYC and it will be done. Number 1. Another is offline. You provide what is called as your demographic data, and based on that they make a verification and they send you an OTP on your registered mobile number which you have to provide, and if that is authenticated, that also you can open an account. But an account which is opened through eKYC has certain limitations in terms of how much transactions you can do over a year. And within a year, an account that's been opened through eKYC has to be converted into a full KYC account, either through a video KYC process or through a person coming inside. The requirement for a full KYC is that a bank official, the regulatory entity's official, has to sign off saying that I have verified on the person should have been this. Now, as per the UIDI data, they say that these eKYCs are required for various purposes, not just for opening bank accounts. For various transactions, you can have use of eKYC. And just in September, the number of eKYC authentications went from 6 million a day to 16 million a day. they actually provide daily transaction details in the website. You can see that during September, it ranged from 6 million to about 16 million per day authentications being done by UIDF. Another database that RBI has created, and government has created, is what is called as a central KYC. I'm not familiar with how good it is. In fact, I spoke to someone on the sidelines when I was here just today, and I understand there are a lot of gaps that to be filled in. The central KYC is supposed to be a central registry of KYC data. So what Reserve Bank said is that when the bank opens an account for somebody, that person's KYC data and documents should get scanned and get transferred to this registry. It's called a central KYC. Okay? It's again a government agency, and it is embedded in the law that a registry of KYC data has to be a government organization. Okay? And so this is being uploaded, and two things happen. One, the requirement is as and when they open a new account, it must necessarily be uploaded in CKYC, number one. Number two, there was a timeline for old accounts data to be also moved in there, but I think one of the things that RBI finds that this is still not happening. Possibly there are concerns both from the part of the banks and the customers in the. But if this can work the way it should do, what it will mean is one does not have to provide documents every time. So when you actually register data with CKYC, you get a number. So when you go to a bank to open a new account, another bank, you have to just provide that number. Based on that number, all other documents can be downloaded, and you don't have to provide the accounts again. But there are certain technical issues on this which have to be sorted out, and possibly that's one of the reasons why it's not taken off, has not become as popular as it should be. But I think if we are able to solve some of those things, even the hassles of having to provide documents every time that one goes and opens an account can be kind of done.
I have a question.
Yeah.
There is a difference between, we talked about the eKYC and the full KYC. And what I understand that is when you do the eKYC, you have to complete it in person for it to be a full KYC.
Yeah.
Can the eKYC be used like a full KYC?
No. See, the reason for the eKYC is because the eKYC is not necessarily done by the bank. Okay, there will be authorized agencies through which you do, right? So they will do that, and then you confirm it, right? Number one. So when you do that, and second is OTP based. When you do an OTP, it is based on the assumption that the registered mobile number provided to the Aadhaar authority is the correct one. But today what happens, it can be the father's mobile, it's the son, it's with anybody else, right? So there is a lot of questions about how adequately you can accept an OTP based authentication. Okay, which is why once you do an eKYC, there is limit in terms of number of transactions that you can do, value of transactions that you can do, till you convert it into a full account. But what happens is, just to put things in perspective, why some of this happened. Suppose there's a flood in a place, right? And the government provides financial support. The financial support is provided in form of, say, a check. And now it's a bank transfer, they want to provide in form of check. If I don't have a bank account, I have to run helter-skelter. So at least what this provides is a quick way to open an account so that some of those things do not get stopped. And then over a period of time, complete the whole transaction. The second part which is important is to also understand that many of these people may not have transactions beyond the month limit. But if you allow eKYC based accounts to continue years and on, that could become a potential source for money laundering. Which is why they say there's a requirement for this to be continued for full KYC in years. Now, when we talk of the digital, transformation and the financial inclusion in India, this is something we cannot avoid talking about. It's called as the JAM Trinity. It's basically called as there are three elements to that. What is called the Jan Dhan, Prime Minister's Jan Dhan account. Number two, I'll say a few words about that. Two is the Aadhaar itself, and sorry, there's an A missing in the Aadhaar. And then last, of course, is the mobile telephony. The PMJDY. So India used various ways to provide reach banking accounts to people, but it was not picking up the way it needed to. So what happened is one fine morning, the Prime Minister said, every Independence Day, the Prime Minister addresses the government, the nation. He said that I want bank accounts to be open for every adult in this country in a time-bound manner. And what was done is, people did not go to banks. Banks went to people. So I called the Prime Minister Jan Dhan Yojana accounts as an opening of accounts in camp mode. Actually, banks camped in villages, and what was facilitating all this was Aadhaar. So I'm coming to perhaps the PMJDY could not have been a successful and full KYC account, but for Aadhaar being there. Number one. Number two, Aadhaar itself became an element in terms of this, what India today calls as the digital stack. And the digital stack has been enabled by excellent penetration of mobile telephony in India. Of course, you still have people who are using non-smartphones, but still, I think compared to many other countries, we have a fairly high density of smartphone users in India. So these three together is what is called as the JAM Trinity. And what it has done is actually transformed finance services in this country. And I must tell you that this, the Aadhaar and mobile telephony has created a digital infrastructure system in India, which which has gotten into applications we can't even think. Today we have what is called as DigiLocker, where all my documents can be in one place. It's a wallet of all my documents. Okay, and a lot of transformation in the payment system, which I'm going to again talk to a little later. And very importantly, it provided a basis to enroll, as I said. Aadhaar enabled the use of enabling new to bank customers. They were able to be enrolled into the system very quickly, and it provided easier access to banking services, which as I said in my first slide, what are the enablers for financial institution? This digital public infrastructure actually enabled us to provide all that together. So next thing that I want to come to is what has happened in the payment system space. A lot of innovations there. The electronic fund transfer is pretty old now, but since Professor Rajagopal mentioned, I thought I'll mention something about it. The system of electronic fund transfer is one to all and all to one, right? So the idea is that, for example, if a company wants to pay dividend, right? It has to pay dividend. If it has to pay dividend, it just provides one check to the bank and says distribute this dividend to so many accounts, and it gets transferred electronically. Okay, so the electronic fund transfer system provided a mechanism through which two things happened: safe and secure transfer of funds, multiple transactions in a single click, and third, in terms of time. Because if in the past, if you had actually issued a check, the check had to physically go to another place and get passed, right? It took a lot of time. So the electronic funds transfer system provided an easy mechanism for transfer of funds on a one-to-many and many-to-one basis. Number one. So that is among the initial processes that we had in terms of payment system innovation. But subsequently, the payment system has been subject to a lot of innovative efforts, and to a large extent has been driven by Aadhaar and the mobile telephony that India has been proud to have. And these include today what we have, what is called as a National Electronic Fund Transfer. National Electronic Fund Transfer is a 24-hour service where you can make transfers bank to bank. Okay, bank to bank anytime. The difference between and then you have what is called as 24 hours immediate payment services, and this also 24 hours bank to bank. The difference between NEFT and IMPS is IMPS is instant, immediate. You will get the transfer takes place in the next second the moment you make a payment, okay, and the person gets credit. In the NEFT, it is actually batch. It actually gets centralized on a batch by basis at what is called as NPCI. It's a what you call central payment switch for India, and then it gets distributed. So every half an hour. So if somebody made a transaction through NEFT, it will take about half an hour. It could take anywhere between 1 minute, half an hour to 29 minutes or 3 minutes, you'll get in 30 minutes, right? Next minute. So it could be anywhere between 1 minute and 30 minutes. Yeah. Client. Yes, so if I transfer fund to you, I instruct my bank to pay you funds. My account gets debited and your account gets credited. And in the case of NEFT, it's a case of all the transactions getting bunched out every half an hour and goes to various accounts. In the case of IMPS, it happens immediately. And the difference is, in the case of IMPS, you cannot do more than 2 lakhs at a time. NEFT has a limit of 10 lakhs. Anything beyond 10 lakhs a day has to go to what is called as the RTGS. Yeah.
I asked the question because you said that the NEFT is a stack.
Yes.
So that means several customers ask the bank to make a transaction.
Yes.
The bank waited at a time, T time, and then
yes.
the batch.
Yes. Exactly.
Whereas in the IMPS,
yes,
the clients will give a transaction to the bank.
It happens immediately.
It happens
immediately.
Thank you.
And among another payment system I did mention in one of the data is, for example, this will require me to have a bank account, right? I need to have a internet banking. But what about a person who doesn't have? There are two kinds of people who are there. One, I mentioned about AEPS, Aadhaar enabled payment system. An Aadhaar enabled payment system is a system where I can draw money, for instance, by using my biometrics that is linked to Aadhaar. So there's a business correspondent who will have a mini ATM. Okay, the authentication for him to say that I am X Vishwanathan who is drawing this money is my biometrics linked to my Aadhaar, and I can do transactions. So that's come to like 17.2 billion, as I mentioned in one of the earlier slides. But the biggest transformation in payment system in India is UPI. It's a it is to put it simply, it is the interface is not material. The interface is unified. So I can make payments through mobile. I can make payment through an Aadhaar card. I can make payment through a contact. I can make payment through a person who is not in my contact by just putting his mobile. I can even make payment through accounts. Okay, and as we talk today, the data shows that in the last 2 months consecutively, UPI has seen 1 billion transactions in each month. So among the things that this infrastructure has facilitated, as I said, is a digital payment ecosystem that provided ease of fund transfers. Because as I told you, if you want the ordinary person to be happy to do banking transactions, this must be something that is possible, and that's facilitated it. And today, as we speak, not as we speak, it's already there, that because we have a large number of people who just have a ordinary mobile, right, non-digital mobile, but you have USSD based UPI payments that are possible. So it's not necessary that you need to have a what you call smartphone alone. USSD based UPI is also popular. So there are a lot of transactions taking place through that as well. So even ordinary people are able to do it. As I said, one of the major benefits was direct bank benefit transfers, which government managed in a very seamless manner on the one hand, with least or virtually zero leakages in a very highly time bound manner. As I said, UPI enables you to pay using mobiles or QR codes. Today you will find every vegetable vendor on the streets having a QR code. You can pay anything up to between 5 rupees to 1,000 rupees using the QR code, and it's become so popular, in the country. As I said, it's reached small vendors, and one of the things that facilitated this, apart from the innovation, was the fact that during COVID time, there was fear of actually touching cash notes, the fear of transmission of disease through those touch, and therefore contactless payments became the order of the day, and that got a lot of fillip. That gave a lot of fillip to UPI as the favored mode of transactions for people. Today, RBI is talking of providing credit through UPI. So if you have a if you have a pre-sanctioned loan, bank can give us. Look at how it facilitates financial inclusion. Bank can give us a small loan to a borrower. It just gets loaded into. He uses that using the UPI. He can use that money. It's not that he has to actually go get it accredited, issue checks. None of that. And they have currently RBI has used it only for pre-sanctioned loans. Maybe as times pass by, other types of loans also can get used. So when the pre-sanctioned loans, are many of them are what you call not necessarily end-use specified. Some of them can happen. So almost this UPI and credit becomes a credit card. Mami? Yeah. What is it? Okay, United Payments Interface. United Payments Interface. The idea is that it is platform agnostic. That's the point. That's why it is unified. It's unified, right? Unified payment interface. Unified payment interface. Sorry. Another database that's getting used today is what is called as the GST network, GSTN. GSTN. So India has moved from what we call earlier as state level taxes, state level or provincial level taxes, to a national level tax called GST. So India is a country, federal country, right? So we have each state has its own had its own sales tax mechanism, which they could levy on transactions or sales that happen in their states. Now it's all got unified, except a few products. Everything is now coming under what is called as the goods and services tax, and the whole thing has been administered through what is called as a goods and sales tax network. It's a database where if somebody somebody makes a transfer, makes an invoice, and if there's a GST has levied and has to pay to the system, he has to upload that in the GST network. So if whoever is coming within the GST system, his whole transactions that have happened in terms of who has provided the service and who has provided the service is available in this. And why I'm saying this is very important is that India has, I'm going to the last bullet point here, which is the account aggregator network ecosystem. What is account aggregator ecosystem? It's actually a place where all financial information, assets information can be aggregated in one place. Okay, and the system is the person who's providing the account aggregator service does not have access to that information. He provides access to that information to a person who wants it. So just to put in perspective, I have accounts with 10 different banks. Okay, if I have given a consent to an account aggregator is a regulated entity by RBI. It's authorized and licensed. If I give an authorization, that person can pull all my asset information in one place using an API and then tell me this is what you have, and I can give him a consent. Please pass this information to so and so financial advisor who can tell me what I should do with it. And today, among the people who can provide information and seek information to the account aggregators is GST. This has been added very recently. And what it does is, again, in terms of providing a credit quality information, so you can't mask turnovers today. If you say I'm a GST payer and I have so much turnover, you must be able to. It will be possible for a bank to pull it off from the GST note to whether actually that's the turnover he's having, and it can through a process facilitate even ensuring that you don't get paid loaned against twice. Similarly, as I said, this has really this account aggregate system And some of the people who are here have worked very hard to make RBI agree to GST and becoming a part of this account aggregator system. And I'm very happy it happened, because one of the reasons, one of the things that for somebody to be part of account aggregator system is that the information provider should be a regulated entity. So when RBI was looking at this, so we have banks which are regulated by RBI, we have insurance companies which are regulated by IRDA, you have what you call security mutual funds, etc., which are regulated by SEBI. Okay, different regulators. But GSTN, there was no regulator. So RBI said, you have no regulator, I can't put in account aggregator, because there's a lot of data security involved, right? Quality as well involved. So ultimately, government took over. One of the departments of the government said, I'll be the regulator. After that, actually, RBI added, but it has enriched the account aggregator ecosystem in terms of data provision capability to enable much more financial inclusion on the asset side, on the lending side, is what I believe. So I'll conclude with this last slide I have. As I said, still an aim missing in this. Aadhaar provides a secure, indisputable identity, digital identity to the person, which facilitates ease of KYC, but with a very strong identification process, right? Authentication is possible, both offline and online. It prevents misuse of, because as I said, if you simplify KYC in the name of ease of opening accounts, and you do not have strength in terms of quality of the digital data which identifies persons, your finance system can be prone to money laundering. That's what this prevents. It's obviously helped the improvement in payment system, and payment system itself, what has it done? It's enabled easy transactions, but through a reliable infrastructure to ensure safe payments. Number one. Number two, it provides modes, multiple modes. So courses, as I said, you want small payments, you can do IMPS. You want to do medium-sized payments, you can do NEFT. If you want larger payments, you do RTGS. If you want to make payment without having go through the banking system, use the UPI. Multimodal opportunities available, and based on the needs, one can make it. And last, of course, as I said, the GSTN is another part of the data infrastructure that we have. Reliable data on sales. It provides, credit assessment facility, and even can be used for preventing multiple financing. So India has, I would say, therefore, used a multiple set of databases, public data infrastructure to what do you call, empower its people financially, democratize the financial system, and at the same time do it in a manner that it is conducive to financial stability. That's what I want to say. Thanks a lot, and I'm happy to have your questions. Yeah.
Yes, thank you. The banking sector is the most regulated industry, especially to prevent the money laundering. So, done by the government of India to make sure that Aadhaar is compliant with the banking sector regulations, and make sure that the banking sector can trust Aadhaar as.
Yeah. So
yes.
yeah, three things. Number one, originally Aadhaar is just an identifier. Okay, it's just a digital identifier. What RBI said is that if you're using Aadhaar, you must have a verification process to ensure that. And what the both the offline, online, and biometric verification process enables is to ensure that, number one, the person who is providing the ID is unique. Because as I told you, because the Aadhaar name is, if you've got an Aadhaar in a name different from yours, your name forever will be that different name. You cannot have another name with the same biometrics. So the identity, uniqueness of the identity is ensured, number one. Number two, I think, as even the previous speaker said, the ability to verify and authenticate from the database is an important interface that's been provided. Two, and third is that it is this is purely what do you call one part of due diligence, right? When you want to open an account, the due diligence has several aspects. One is the identity information, number one. But there are so many other aspects that one needs to do. So it's only saying that don't if you have somebody has provided an Aadhaar and you've done this verification process, you can take that as a reliable information to assure yourself that the person who's provided this Aadhaar is known in the system by that name. That's what it matters. All other elements of due diligence has to be done. Customary due diligence is none of this is diluted for a what do you call person. So you have to have what is called as an electronically verifiable database that you check with, online database that you check with. So even if you give a PAN, you can give what is called as a permanent account number card. Even that, the income tax department has a digital database. You actually verify with them saying that is this what's the photo of Mr. Vishwanathan has given in this PAN? What is his name as per your database? You verify that. Not at all. For the central bank, why should the central bank have any resistance if it believes that this is not any less safe than any other identity system? Number one. And there was adequate evidence for RBI that it is as safe and in fact much safer than many of the other identity cards. And at one time, as I said, RBI said that this will be the only identity personal identity proof, which of course subsequently had to be reversed because the Supreme Court said that you cannot mandate. Yeah. Right? So yeah.
Okay, thank you. Thanks for this presentation. I want to know, as Aadhaar is a unique ID provider in India, are you able to really reach the remote areas? Let's say I'm a woman farmer, like the one on the picture there, and I live somewhere, I don't know your village's name. I have no access to the connectivity, and I don't even have a smartphone. I only have my phone to take calls. I cannot double check if you send me something that I have to approve so that you have my unique ID. You cannot make a KYC with video where I am. How do you integrate those populations so that they couldn't be excluded from having a unique ID with other?
So two things. One, the data speaks for itself. So we are looking at that more than 99% of the adult population has Aadhaar in the country. So that's proof that it's happened. Number one. Number two, actually, in the initial years, the UIDI, what do you call, enrolled a large number of enrollment agencies. Almost many banks were enrollment agencies. Today, of course, every post office is an enrollment agency. Okay, you will have connectivity issues, but fortunately, it's not. At least the way I see it is so far, the fact that most people have an Aadhaar card. I mean, obviously, I've not faced it, because I've been in a city. I've not heard this problem of connectivity coming. Where we do have problems with connectivity is when you want to make payments. There are issues of that kind that has happened. Number one, and as I told you, many of the PMJDY accounts or the Prime Minister Jan Dhan Yojana or the mass accounts, they were opened on a camp mode. So actually, banks went there with they could provide a lot of what do you call internet connection through specific instruments. And today, because I am also there's a mention about my association with the Institute for Development and Research in Banking Technology. That institute is actually having a project to provide internet services even in remote places through a small device. There's a project that is going on. So as far as I know, the opening of Aadhaar has, providing of Aadhaar has not been in a way inhibited by the fact of that.
Okay. The second point is just for us to know.
Yeah.
What example can you share with us as complaints that you had when implementing Aadhaar, even in the city and in the remote areas, so that we can learn from that?
So just to put things in perspective, I didn't work for UIDI. Okay, I'm a central banker. So on the basis of what I saw in the public domain, there have been complaints of duplicate Aadhaar cards being there in a few cases. But if UIDI has received any specific what do you call complaints on this, I think somebody must be able to explain that to you later, because I don't come from that ecosystem. I'm from the central bank, which use this ecosystem to enable financial inclusion through use of this system. So somebody is there, will be able to help you on that. Yeah. Yeah.
Okay. Thanks for mentioning. I think that my sister's question about the needed infrastructure to underpin all this.
Yeah.
This is maybe one question for Ramesh coming next. But I think that what is important for the countries is to understand what is the bare minimum that is needed to be able to put in place these technologies. Because communication infrastructure seems to be important, unless I'm wrong.
So yeah. Okay. As I told you, I'm not. I can honestly admit, I'm not familiar with the Aadhaar part of it. So they will tell you. I am more on use of Aadhaar in the financial system, and RBI has made a lot of developments and innovations to facilitate use of Aadhaar as the backbone for both financial inclusion and financial transactions, and that's what I said, how it has been facilitated. Okay, thanks a lot. Thanks for the opportunity.